From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming January 2nd Forex session in the euro dollar pair. In case you're seeing this on the 1st, obviously there are no markets open during the session, so this is actually being recorded 2 days ahead of time. And as I look at this chart, you can definitely see some very obvious things going on right now. For example, we are most obviously consolidating between the 131.50 and the 133 level. Because of this, this has been a very difficult trade to make. Quite frankly, it's a pair that recently has been putting us to sleep. And now the question then will become whether or not this consolidation is simply rest, is the market resting before it goes higher, or has it finally met its match in the form of 133. I'll zoom out here, and you can see that there's a lot of noise in this general vicinity. So because of that, it's difficult to get overly bullish at this point. And in fact, there are several things that could be pushing this pair right now, and one of which is the fiscal cliff talks in the United States. What caught my attention on Monday was the fact that while other risk-on pairs shot straight up during the day as rumors and statements by congressmen and the like came out and suggested that they were getting closer to some type of fiscal cliff deal, leading to a risk-on rally. I mean, after all, the Dow got, off the top of my head, about a 150-point gain. It was interesting that this pair did nothing, and to demonstrate that, to kind of like show the difference, you can look at the Kiwi dollar, and you can see the Kiwi dollar had a very strong day. At the same time, the Euro US dollar did almost nothing. Another thing that has caught my attention is the fact that in the Euro pound pair, for example, you can see the euro just cratered against the pound. Now the pound had a very strong day, but why is the euro not having the same kind of strength that its neighbor, the pound, is? Something to be worth paying attention to. In the meantime, though, it looks like we will bounce around in this level, and it makes sense, quite frankly, that we wouldn't do much until we've got some type of certainty out of this fiscal cliff situation. But I do find it interesting that other risk-on, risk-off pairs did in fact move, and this one didn't. So that's something to pay attention to. If we break down below 131.50, I'm not ready to start shorting until we get to about 131 and clear that. I see this more as a zone than a line. And above at 133, the problem we'll run into is, we'll zoom out to the weekly chart, you can see there's a lot of noise just above it. So probably not going to be easy sailing going forward. I expect a lot of choppiness still, and quite frankly, even if we get past the fiscal cliff situation, the United States is only about 2 months from having to go through the debt ceiling negotiations again. And President Obama already suggested that he was going to ask for more taxes as a way to kind of cut spending or make up for spending, which is something that's already leading to the next fight. So looks like we're going to have a lot of rockiness in this year going forward. And the entire first quarter is probably going to be a mess. This is one of the places you will see it the most. So all we can do really is rely on the technicals. Above 133 on a daily close, you'd have to be long, but you also have to be aware of the fact that it'll be a grind and not a move. And alternately, below 131 or so on a daily close, shorting to about 129 looks very viable, and then of course 127 underneath that.